Erin Gibbs, despite all the worries over Greece right now and the fact that Europe has outperformed the U.S. in the first half, you still like Europe. Tell me why.
So there are a few reasons. One, we're seeing really good growth coming out of Europe. For the S&P Europe 350, the large cap index, we're looking at about 10% earnings growth this year versus almost nothing for the U.S., and about 12% next year, which is about equivalent to the U.S. So overall, very good growth. And they're trading at much lower valuations. All this volatility from the Greek exit, those concerns, have actually brought valuations down to about their 6-month average of about 16.3. So now it looks like a much more attractive time to get in.
All right, well, one stock you like is Sanofi. They have a relatively new CEO and a new diabetes drug to replace the old one. So is that enough to take this stock higher in the second half?
Yeah, so ever since they've bought Genzyme, they have had really good growth. That was one of the best acquisitions they've done. Now, they're one of the biggest pharmas outside of the U.S. They're not as well known in the U.S. They've gotten a new CEO who really knows the U.S. pharma market, and they're planning to do more expansion over here in the U.S. So I do think it's one of the better growth stories in pharma. It's also cheap. It's very hard to find cheap pharma in U.S. stocks. I feel this is one of the few values where you can get that kind of pharma growth and not pay through the nose.
All right, let's jump across the channel to Great Britain, and you like Marks and Spencer. It's a supermarket chain. I want to find out if the British people are going crazy over healthier foods like they are here in the U.S., maybe driving up some sales and margins.
So they're doing well. Their grocery sales are doing well. That's one thing that Marks and Spencer's has had. Not high growth, but consistent growth. What they have been struggling with is the clothing and houseware sales. That's where the margins really are. They had really good growth in the fourth quarter of last year. First quarter, it's been a little flat, but we still see overall positive momentum. And so we expect that to also come back. And also, another good value. It's very hard to find good value in consumer discretionary space. Marks and Spencer's is one of those.
All right, and then finally, Zurich Insurance Group pays a nice dividend, 6%. It's hard to get that anywhere.
Yeah.
Seems like it's a good defensive play.
Yeah, so Zurich, it's very well valued. Again, like 6% dividend yield. It's Zurich Insurance. It's been around for ages. It's a nice, safe bet and a good value.
All right, thanks a lot, Erin.
Thank you.
And thank you for watching The Street.